Hey everybody, and welcome back. In today's video, we discuss the markets around the world, including stock, crypto, and commodities. And we're looking at the key levels that you need to be watching over the next 24 hours. All markets are currently at key levels. We're talking massive resistance across the board and some serious breakouts if they do occur. If you don't believe that markets are all interconnected, watch today's video, and by the end, I'm sure you're going to start to see how risk on and risk off works. See you very soon. This will be a great one. Well, welcome back everybody. Let's begin our daily recap show here where we cover off on the markets for the 13th of April 2022 in terms of the close. If you like stocks, cryptos, or commodities, remember to subscribe and smash that like button if you find value in today's video. Let's move through what happened for the session. We had a risk on. So basically all of the technology stocks were doing well. All of the high risk, high growth companies had a great session. That began at the open. We opened right on the support. We've been talking about almost a do or die situation here for the bulls, and they managed to rally it through a pretty decent day in terms of statistical day of bullishness. Here we have the open rallied, and we ran all the way through to the close, and Nasdaq and Russell 2000 led. That means the growth stocks. Pretty much it was buying into the close as well, which is important because it means Wall Street were convinced of the rally and they were happy to take it to the resistance that we'll be talking about today. What was the best sector though? Well, it may surprise you, jets. Yeah, we've kicked off earnings season. We've had the banks come out, JP Morgan, not great, obviously down on the session, and Jets Airlines coming out. Pretty good, very good earnings from the Jets Airlines. And this could mean that the recovery trade is finally about to happen. We'll take a deeper dive on that later on in today's video. Remember, recognizing when sectors are rotating is pivotal to trading success. This year should really prove it to you. 2022 has not been the year of technology. It's been the year of other sectors. So if you've never considered that, definitely do start to consider it. It's very important to understand. We also had minerals and metals doing very, very well, and the rest of the kind of risk-on stocks were doing well, while the defensives languished. Things like utility, staples, etc. didn't do fantastic on the session. Now, we're about to head into the long weekend, that is Good Friday, and we know the day before Good Friday historically has been a very bullish day for markets. Interesting. We'll bring that stat back a little bit soon, but take a look here. We noticed that the previous day, the Nasdaq was up the last 20 of 21 days before Good Friday. 20 of 21 days. Wow. So this is a very strong day we're heading into for risk on. That is, usually it does very well. The question we have to ask ourselves is, even if it does well, are we still in some kind of really bad market that's really sick? And I think we'll come back to this in our weekend video, but that's something that we do need to think about. Are we in some form of bull trap at this point? Now, we've talked about midterm election years. We've talked about this idea that there's sometimes a rally in the back end of April or middle of April into all of the full earnings. And our theory coming into this month was maybe we would need to wait for tech. If we do rally here, we do still expect weakness and a potential double dip later on this year. That has always been our theory for 2022. The idea that this is the year of the trader and it's going to be up, down, and all around, with hopefully a really good capping at the end. And we'll talk about stats as we break down throughout this year. Remember to follow us for this type of stuff. As we mentioned, we're in earnings. So what does that mean? Well, we've had the bank, not so good, and we've had the airline, pretty damn good. Now we go into more banks. All the big banks here before the open, a very important session. Let's see what the overall market conditions are. And certainly banks can sometimes lead really bad times in markets. And right now, if you load up something like a Goldman Sachs or a JP Morgan on the charts, it's not going to look so good for the economy. So are these rallies mostly fake? That's a question people will be asking themselves, and rightfully so. So we're trading right now, but from an investment perspective, is there a sickness in this economy higher than people believe? Well, let's talk about the VIX first. So the fear came out of the market. That is that the volatility in options basically dropped, and we saw the VIX, or the fear index, drop straight back down. Part of the reason why this is because it looks like for now, potentially inflation may have peaked. We got the inflation result. Since that point, what's happened? We've actually declined on the US 2-year. So we know the Fed's all the way down here. They're not even close to where the US 2-year is. But we've long thought that the US 2-year will probably come down as the Fed increases rates. Remember, the Fed is really ruining or trying to kind of constrict the demand side. In their perfect scenario right now, the market does decline and it hurts the demand side even further to a degree to allow them to be able to rotate out, because they made a massive policy error. We all agree on this, I'm sure. The policy, I think the Fed could have literally been controlled by a homeless person on the street, and it may have been better than what they did. And you might disagree with that, but I think a lot of you will be like, yeah, that's probably true. They ran it pretty poorly. The sugar rush, all of these things. So we've got US 2-year coming down. Is that good for technology? The answer is, frankly, yes. If the US 2-year comes down, to a degree, that means that we can go risk on, because of course tech is susceptible to interest rates. So certainly a very interesting thing here that's happening in the smaller timeframes at this stage. PCC, put call ratio, not much to really relate to back here. A little bit of extra, I guess you would say, calls coming in. So it's not really a heavy amount of puts that are being loaded in the market. And I would say the balance there is fairly normal. So that's basically a neutral. We've also been very long on gold recently, and that trade has continued to present. We've got the concept of taking it to the 61.8, possibly even the 78.6, around that 2000 to 2040 level. And that seems to be intact at this stage. Very strong movement. And of course, if you're new to this channel, the way that we figured that out was around in this area here, where we got this really nice little flag and obviously the bullish, and we broke this downward trend line. That's where we got the trigger to buy into gold. And of course, this is where we are. From a technical perspective, it looks like this trend's intact, and currently it's bouncing off the 2-hour 20 moving average. That's the red line. US oil, very similar. Great kind of strategy here, declining trend, obviously very nice little bounce area and broken through. This looks relatively strong, though it's not the same in terms of us having a clear target on oil. It just looks like oil has broken out. First kind of area of big resistance will be around this 105. You can see it stopped just before that. Second area will be 108, etc., etc. Each one of these resistances will be a big zone, but certainly a nice breakout, and the oil trade seems to be intact still. Let's now talk about the broader market though. We'll go into Tesla to start off with here. So you guys have been rallying this one up. I know a lot of people here trade Tesla, and it's certainly been rallying, and it's gone back to the 1022 level. Now, what is that? Well, it was previous support, which got broken through, which has become resistance, which has then gone back up and become resistance again. Is this breakout very important? Yes. A few of you will be yelling, double bottom, double bottom. I see it there. Yeah, it could be. And if it breaks through here, of course, that kind of is proving the idea that risk is back on. Where's the next stop for Tesla? Could it be 1080? Well, I think once we go through all the markets today, you'll see they're all kind of presenting the same concept. So is this a double bottom? It's got potential. If it breaks out, the next stop you would think technically is around that 1076, 1080. Let's look at Apple. Apple actually went, remember this is a very strong stock right now in the market. Apple actually went and broke through its already declining trend line. It did it, and it just went, you know what? I'm done with this. And it's gone back to, yes, previous support becoming resistance. But in general, Apple's kind of said, you know what? Maybe I'm a little bit stronger here. The market's feeling pretty good. Let's now look at some sectors before we go over the indices. Well, here's jets. Here's, of course, the airplane companies. Now, this really represents more than just the airplane companies. It represents travel and everything to do with travel. Whether it's cruise liners, whether it's traveling companies, whether it's booking companies, I don't know. It could be anything. But it does have the hallmarks of a potential recovery. We thought that it may have a hallmark over here. And I do believe that before the Russia-Ukraine crisis, we were about to break out and things were about to go well. And I mentioned this at the time. Unfortunately, the crisis was going to ruin the recovery trade because, of course, what happens? Instability in the world, the idea of course, crisis. All of a sudden, people don't want to travel. Now, as we move forward, you may say, well, nothing's changed. Yes, but people forget about things easily and they go back into thinking, okay, well, now we know it's the new normal. Yeah, the new normal has happened. So we have a max pain. That is, the market false broke to the downside and has rallied. As many of you would know, we have a trough, we have a peak, and we have a higher trough. So could this sector be improving? Well, certainly good earnings is leading into that concept. And of course, it starts to make you think about, maybe there's more to it than just that. Let's talk about financials. So financials, well, it actually went up yesterday, just barely. So it gapped down and then it went up. Now, it certainly wasn't thanks to JP Morgan. If we take a look here, it was down 3.22%. Now, a lot of you will look at this chart and you'll say, whoa, is that a Wyckoff? I believe you're correct. So it has the false upward thrust. It obviously has a secondary one over here, and it's already failing. Now, as you know, I'm not a big fan when financials fail in markets. It's kind of something that's a bit of a warning sign. And this actually all happened in February in terms of the weakness and everything that's been occurring. So the idea is if things are really going to improve and this rally is going to be truly believed long term, that is for an investor, you need the banks here to actually start to create double bottoms and move through. Because Goldman is very similar. If you load up Goldman Sachs and you bring it on, well, look at that. Again, lots of weakness in the finance sector. Very surprising that overall the market's doing what it's doing, considering the financials are so terrible. Something to keep in the back of your mind during any rallies that we do see in the future. And it's why we always have that idea of a secondary dip later on in this year, whether it happens really, really quick right now or whether it happens later. Let's now talk about how all the markets are interconnected. So this is the DAX, the German 40, and you'll notice here a downward trend line. It's basing and it's trying to break through as we speak. Important, it's trying to break through a base that has been formed. It's at resistance. Let's now take a look at IWM, the Russell 2000, small caps. Where did it close? At resistance. Interesting. We're right there. The decision of the bulls and the bears fighting it out at that zone. Where do we go with the US 100, the Nasdaq? Downward trend. Okay, that got broken. I can see why rallies happen through the session, of course. And where did we close? At resistance. So we're right at resistance of a potential here double bottom. And if we break through, where's the next logical conclusion? Could it be the resistances over here, about 14,600-ish for the Nasdaq? Or at least 14,400, yeah, previous supports over here. So there are some buying opportunities that may happen through one of the stronger days that you have statistically for something like risk on. Now, obviously, stats is only one thing. I'm not saying you do anything in particular, but it's an interesting point. We are at resistance. We are at resistance. If you have a system that's based on being able to recognize how to trap and close above resistance, well, there you go. Here we have the US 500 and we have a downward trend. Of course, what are we doing? We're at resistance in the close. Obviously, the futures here trading a little bit higher. There's the resistance at the close. Again, the point of no return for the bulls and the bears. It's not like we didn't know this was big. You put a fib on this level. It's a 50% fib. It's the previous resistance becoming support. It's paramount that the bulls take control at this point if they want to have a chance of getting this thing to rally. Otherwise, the bears are going to take full control of it. Here it is in the real market. Look at that closing right on that 2 hour 20 previous support resistance. They're all interconnected, these risk on markets, even the crypto markets, which you'll see very soon. Let's talk about max pain. So max pain, obviously for the 14th, where is it set? 445. So actually, if the market did nothing and it closed right around where it is right now, they would have the perfect closure for the current amount of options that are about to expire. Very interesting. That's exactly where they wouldn't mind it. They managed to close it pretty much perfectly yesterday. They've been good at extracting a lot of money out of us as the retail trader. So yeah, max pain's right around where it was. It's coming down, which means that there's actually a decent amount of calls. Will it short? I don't know. Neither do you yet. I mean, we're at a resistance. Long seems to be the data. And if it does break out, you'll know you're going with the data. Where's the next stop? Is it 45.20? Makes a lot of sense. Support, support, resistance, resistance, 45.20. So these are the types of things that you break down through markets. Let's now go and have a look at the crypto market. So here we've got the crypto market. And you'll notice again, we have a downward trend. We have a basing pattern, which is coming off a very decent trend line here through Bitcoin. And it's at resistance. Coiling and consolidating, waiting for the real markets after Asia, the London market, and of course the US markets to open and to start, really making a decision on what they want to do. Bitcoin shorts, that's decreasing, showing us what? Well, it's telling us something here. It's saying, hey, maybe the nasty bears have left the building for now. So that's maybe a little bit of an inkling about the fact that they've stopped shorting Bitcoin a little bit and they're starting to reduce their short positions. Ethereum is the same. Downward trend line sitting on it. So they're all really very, very close together. And I think it shows you here that we're at a pivotal point, obviously an important point. Bears will try to short, bulls will try to rally, and depending on who wins in this situation, probably we'll see follow through. That's what you're looking for in these situations. You're looking for that kind of edge if you can. So I hope you've kind of enjoyed that. And as always, if you haven't already, come and follow us at FX Evolution on Twitter. Always helps us out if you do that. And then if you think about it, what big information do we have out as well? Well, we've got two really big bits of information coming up. The ECB press conference. It's going to be important to the world to see what the monetary policy kind of is. Then we've got the core retail sales for the US, 8:30 a.m. New York time, 1 hour before. So these types of things, they're all coming out. We've got lots of information, lots of stuff going into Good Friday, theoretically strong statistical data about bullishness. Will we break out? We don't know. But if it does, maybe it continues on and moves on up. So thanks so much for watching. If you have enjoyed, please subscribe, smash that like button. We'll see you on the weekend for another video. Good luck out there, everyone. Bye for now.